Welcome, everybody, to today's episode of the Main Street Business Podcast. I'm here with my amazing co-host, Matt Sorensen, talking about the PPP and COVID relief. Again, this is only going to be part two of, I can imagine, multiple sections as we continue to unravel this massive legislation. Matt, your initial thoughts?
Well, the good news is Trump signed it after some game, And, he managed to piss everybody off, the Democrats and the Republicans, but it's signed. So we now have this bill we talked about on last week's podcast. We're going to break it down even further, give some more updates on PPP we found that are really helpful, and hit some other tax areas that are really applicable, I think, to business owners. So the good news is they did put in some decent relief. There's something in here. I'd like with this stimulus bill, there's like something in here for everyone. Really.
Yeah, and I'll say this right now. I'm not even going to think that. I am going to say that. There is something in here for everybody. I don't care if you're a billionaire, a millionaire, or $100 heir, whatever. You got $100 in your pocket. There's something in here for you. And and we're going to get to it today, but I'll tell you right now, the dining deduction is, I think, the hidden gem of this legislation for the next 2 years. We're going to talk about it. So there's a little teaser of how good this show is going to be. Now, we want to welcome you. If you've just found this podcast, we're here every week. We've got in the can close to 500 episodes over the last 10 years. And we've got a great 5-star rating. We'd love to have you stay and listen to many of our episodes from the past and into the future. We try to make tax, legal, business building, wealth building, planning fun, entertaining, and both of us as tax lawyers, we've tried to become nationwide experts in these topics we cover. We have wonderful guests. But for the next few weeks, I think we're going to be knee deep in this. We'll probably do more of a Q&A podcast next week. But for now, we're still trying to unravel this. So we're just going to talk about it today, tell you what we're finding, and hopefully we find this helpful.
And we hit some social media. We did some social media posts. So I do have some questions that did come in. We'll field some of those along the way. But let me first hit PPP. We talked about it last week, Paycheck Protection Program. Okay. A lot of small business owners went out and got these loans. There's 2 important updates for those that already got loans. And then there's a whole new round of funding out there that you can go get what's called a second draw. So let me just summarize that first. And then we can move into some of these new topics. Is that all right?
Yeah, I'd like to as well. I think for everybody out there that already had a loan, they may be thinking, should I? Shouldn't I? Well, we'll come to that. But if you did get a loan, you give your point. I got a couple thoughts too. You go first.
Yeah. So one of the hanging areas out there was the IRS said, hey, if you get your PPP loan forgiven, we're going to tax you. You don't get to deduct all the money you spent on wages and everything. It was basically a way for them to effectively tax your PPP loan. So Congress reversed that. That was in the bill. So all PPP loans, if you've already been forgiven on the first round or you're ready to apply for forgiveness, don't stress. That has been fixed. You will not be taxed on it. So that's update 1 for existing PPP borrowers.
Okay. Next, along with that, they try to make it easier to get forgiveness. Now, previously, turning the corner into this last month, there was really kind of 3 applications. There was the EZ, if you have no employees. I've got an article out there on Entrepreneur Magazine. Easy to find, well read. Please check it out. It's got a link to the EZ PPP application if you were out there and met certain criteria with no employees. Then there was this kind of a simplified app for under 150 grand. And then anybody above that kind of had to go through a bigger application. Now they've tried to even simplify it further. Can you explain it, Matt? I've heard you do it better than me as I've tried to.
Yeah. They basically, what they did, it sounds like, is the Easy app, which SBA was only letting you do if you had 50,000 or less, they're going to let you do it for 150 or less. So the rule is in the bill, SBA has to come up with a new forgiveness app for loans 150,000 or less that is limited to 1 page, does not have calculations other than the loan amount and to say you qualify, and you submit it, you're done.
I love it. It's like the perfect test for a fifth grader math class. It's like, I want one page. I don't want to do any calculations. I just want to get an A. I just want an A.
Yeah.
So you can't even dream of this in high school.
Yeah, it's kind of like the math test of like where you don't need to show all your work. If you just put the top amount, here's the loan I got, here's how much I want forgiven, sign it and say I qualify, you're good.
Yeah. Now, people have got to be careful not to take advantage of this and lie, cheat, or steal, because you get caught. It is not pretty. But the government is kind of doing this to say, we're sick of this too. No one wants to read all these applications. The SBA, those poor people are, all on, antidepressants, and they're just begging for a simple process as well. But there will be spot checks. There will be spot audits. Yep. We've already seen across the country, you'll see it in the news cycle, people that have gotten arrested and already thrown into jail. It is criminal if you screw around with this. So, but it is simple. Okay, so that we're waiting for that new app to come out. Of course, you'll get it here first at the Main Street Business Podcast. We have a weekly newsletter. We hope all of you have signed up for that previously. Please just click on it. If you don't click on it on a regular basis, our client resource management system will stop sending you an email. You have to open it once in a while. But whenever we get new information on this, you'll see it in the newsletter or you'll get it here at the podcast. So that's the forgiveness part. Okay, now if I want round two, what would you tell people?
Okay, if you want round two, it's similar to the first round for most people. You get 2.5 months of your average monthly payroll from 2019. So if your average monthly payroll is $100,000, you can get a $250,000 second draw PPP loan. If you're in the food or restaurant business, you can get 3.5 months average payroll. This is a little bonus that they gave out to the restaurant industry. It's just been crushed. So you got $100,000 monthly payroll, you can get a $350,000. These are called second draw PPP loans. Now you can use a new lender. Most people, I think, will go back to their original lender because they already got all your stuff. So as long as it went okay at the end with your prior lender, you likely want to use them. Now the big catch though is in the first round, the way you qualified is you said economic uncertainty made the loan necessary. Okay, pretty much any business could have said that in the first round because nobody knew how this was going to affect their business back in April when these loans started getting funded. Now we've had a track record and Congress recognized that. And I think it was smart and fair, but they basically said, you know what? A lot of businesses actually did okay and weathered the storm. We only wanted to let the second round go to those who really got hammered and are struggling. So now, in order to qualify, you have to show that you've been affected and that you've had revenue reduction of 25% or greater in one quarter of 2020 versus the similar quarter in 2019. So if third quarter of 2020 sucked and you had a 25% less revenue than you did 2019 third quarter, you would qualify. You just have to hit one quarter where you can show a loss of 25% or greater of revenue. So there's a revenue test now for the second draw loans.
Okay. I would also say this, the same forgiveness procedure has already been delineated. So they said, any of you that get this, there's not going to be this wait and see thing. You're going to follow the same forgiveness procedure. If it's under 150 grand, you get the easy one-page app. And number two, it is not going to be considered taxable, meaning any expense you paid for with those funds is still deductible on your tax return. So this is free money. Now, like Matt said, you got to follow the rules. You got to use X% for payroll. You got to keep some decent records. Don't get reckless with this. Don't put it in your personal account. We've talked about this all year long. You want to do your best to treat it like sacred funds, spend it for what you should, and then you're off to the races. But I think what was neat, Matt, too, is I want to just point out what Matt said clearly. All you have to do is say, take any quarter in 2020 and be able to show from your bank statements or your QuickBooks or whatever accounting software you have, because your 2020 tax return isn't done yet. So they're saying choose any quarter in 2020, then print the same darn report for 2019. We better be comparing apples to apples. And you may say, well, when COVID first came out, it didn't affect me. First quarter, I was fine. Second quarter, I was about the same. Third quarter in the summer, it killed me. Okay, choose that quarter. print that P&L out. That's your profit and loss for third quarter, July, August, September. And then you're going to go back to 2019 and print out July, August, September for the same parameters, same income and expenses. And that's going to be closer to what probably your 2019 tax return looked like. And then you compare those. If there's a 25% reduction in sales, don't worry about net income. Don't worry about how much payroll. Don't worry about how many employees you had. You're looking at one freaking number. You're looking at what were my sales for third quarter in 2020, if that's the quarter you choose, and compare it to sales in 2019, the same quarter. Less than 25%, you're in the money. Go to the same bank you went to before, probably, unless you had a miserable experience, and go say, I need to apply. You do not go to the SBA. You're going to follow those same application procedures. Go to your bank and say, I'm ready for round 2.
Yeah. Now, one thing I'll just remember, it doesn't matter what your expenses are. So I know a lot of you small business owners out there, your books might be a wreck this year in particular. Your expenses aren't all dialed in, but you're going to have your revenue, or you can at least pull together your revenue just from your bank statements, at least if you haven't been good at tracking that. So just focus on the revenue or sales. As Mark said, that's what they're going to be using for qualification on the loan. And the bill did say the banks are basically going to be able to rely on whatever they can. Like they're really relaxing the rules on what the banks are going to look at to say, yep, you qualify for these. So they're kind of putting the burden on the business owner to just be truthful, really. Okay. The last thing I was going to say on this is I had a question from Malcolm on social media about, he said, I didn't get a first round PPP loan. Can I get this second round effectively? Yes.
Absolutely.
And let me say, you get to qualify under the original rule of economic uncertainty makes the loan necessary. If you never took a PPP loan at all, you do not have to use the revenue test. Okay. That's a nice little perk for people that never got in on the PPP first time around. So that's a nice benefit from Malcolm. I don't know if you would have qualified anyways, but nice little perk for you. It's going to be easier to get.
Yeah. And I'll give a little shout out to Brian Regan. Hopefully he's a regular listener of our podcast, the comedian, where in his stand-up, he talks about purchasing a refrigerator. And I would say that's a nice feature.
That's a nice feature. Yeah. This refrigerator keeps your food cold. $600. This one.
That's a nice feature.
$1,000.
We love you, Brian. Love to have you on the show. Okay. Now here's where I want to go next. This is very important for everybody. I want to talk about the sister strategy. That's the employee retention tax credit. Now don't go away, people. Before, in the last round, you had to choose between PPP and retention tax credit. And a lot of business owners would do the math between the two, and they'd say, well, I don't want to have a target on my back for the media and get in trouble for taking this money when we haven't had a massive reduction like other businesses. So we're just going to take the employee retention tax credit, which was really kind of flew under the radar. But this time around, you can do both. Now, people, I've got to say this. You don't know how many friends that are professionals, doctors, dentists, small business owners. They run a flooring business. They run a catering business. And I go, how'd you do on the PPP? How much did you get? Did you do this? They said, my accountant did it all. Oh, really? Did you try the ERTC? No, I don't even know what you're talking about. I just let my accountant do it. I really think people have got to be a little more engaged in this conversation. Accountants are not created equally. I just looked at a tax return this morning for a client of mine that thought he had the creme de la creme accounting firm, and I saved him $15,000 in tax on one issue that I found that was really a base hit softball throw. And so people, as I bring up ERTC, don't check out. Don't say, well, it's just PPP. Okay, I'll call my accountant, make sure you get my PPP, and then you move on. No, listen to this. So I'm just going to define it. Matt, you got to jump in and save me from my rant here. But the ERTC is a tax credit that you can now get up to $7,000 per employee. I'll give more detail. But if you have employees and you also had economic loss, we'll give the percentage, you can get a tax credit against your 941 deposit that you normally put in quarterly. Any of you employers out there know what I'm talking about. Well, you get this tax credit per employee. Did you have to fire them and rehire them? Nope. Did they have to get sick? Nope. Do you have employees? Yes. Is your doors open? Yes. Are you trying to stay alive? Yes. You get a credit. Now, that's the general rule. Let's get into the detail. Matt, how would you break it down?
Well, the first thing on ERTC is you either have to have had your business temporarily shut down or suspended. A lot of states had businesses that all had to shut down. Okay.
Yep.
Or you can show a change of gross receipts of 20% or greater. That's the new update, by the way. It used to be harder to show. So now it's a 20%. This is a gross receipts, again, revenue type test. So you can show that 1 quarter of gross receipts change in 2020 that's less 20% than it was in the prior year. Now, if you were shut down, though, you don't have to show the gross receipts test.
Okay.
It's an or.
Okay. Now, here's what I want to show that's interesting. Once you show that 20% reduction, or the fact that the state mandated you close, you didn't choose to close. The state made you close. That's the difference there. But let's say it was one or the other. I had a 20% reduction in sales. The same method I just described a minute ago where you compare quarter to quarter. What do you do next? The credit is up to, rather than say it's 70% of payroll of up to 10,000, blah, blah. Let me just say this. It's up to $7,000. Okay. That's the short answer. So it's up to $7,000 per employee. And you get it for the quarter. Now, Matt, is it true that you can get it for both quarters?
Yes, that's what I was going to just say. So you could get 14,000. So it's because you get this in the first 2 quarters, you can use it in 2020. Yeah, 2021. Right?
Okay, all right. So
yeah, okay. 2020, we do not want any more of 2020.
Get the hell out. Yeah, stay away from us. Okay, so so I'm going to repeat that. It's a quarterly credit. You would take it on your 941 as a small business owner when you make your quarterly deposit for your payroll procedure for first quarter and second quarter in 2021. If you had 10 employees and you paid them at least $10,000 each in first quarter, you would be able to get a $70,000 credit. That's it. That literally is, and now it's not a refundable credit. They're not going to send you a check, but it's a refund. It's a reduction in the tax you would pay. And if you had already made deposits, you'll get that money back. So, and it's based on your FICA deposit. So theoretically, there are some employees that might be part-time and you didn't pay them enough in FICA withholding to really get to the $7,000. So are you going to get this credit refunded to you? I don't think you'd get a check, Matt. You just get a refund up to the amount of your FICA deposit. Isn't that correct?
I don't know on the credit, on the refunds. There's nothing in the bill as to that. I think that's just going to be an IRS procedural thing.
Okay. I'm going to repeat that because there was a little static there. So Matt says he's not sure. I'm not sure either. But let me just say this. You would get $7,000 per employee. You would take that credit through the payroll reporting procedure for your first quarter and second quarter. And and again, being able to show that you had a 20% reduction or more compared to prior quarters, you've got this $14,000 credit. Now, here's what's cool. You can take it with PPP. People, this is why I wanted you to pay attention to this, because your accountant might miss this. So you can take it, but you can't get the credit for payroll you paid for with your PPP. So let me give you an example. Let's say you get a $100,000 PPP and your payroll, you have to use at least $60,000 of that for payroll to get it forgiven. That's the 60% rule. So you get a $100,000 PPP, you use it for $60,000 of it you use for payroll. The other $40,000 you use for a whole list of other expenses, rent being one of the big ones. And that leaves 40,000 on the table. So what you do is say, okay, I've got 40,000 left over, and probably more payroll you paid out the door in first and second quarter. Because like Matt said, you're really only getting a percentage of your payroll over 1 or 2 months. So there's a play here, if that makes sense. So if you're a strategic, gamer, you're playing games that on the weekend, playing Risk or some, Monopoly or something here, what you want to do is look at the spread. You want to look at, here's my PPP loan, here's my 60%, here's all the rest of the payroll I incurred the first 2 quarters. I can go get the ERTC on top of the PPP. Was that it? Did that make any sense, Matt? Ugh.
Yeah, and yes. So I think kind of the general guideline last year, or I should say in 2020 on the CARES Act original bill was, it's kind of an either or. Go down this lane, ERTC, or go down this lane, PPP. And now you can travel in both lanes. So ERTC, a lot more people should be considering it. Those of you that already got PPP in the first round, you may want to look at ERTC. Remember, you got to qualify for it. Shut down, the business was shut down either partially or temporarily by a lockdown or stay-at-home order, or that you could have just a revenue test of 20% loss of revenue from a quarter in 2020 versus 19. But as Mark said, this is up to 14 grand per employee of wages paid, $7 grand each quarter for the first 2 quarters in 2021. It's pretty significant. And another thing they changed on this too, just keep in mind, the prior bill didn't allow you to take this credit if the employees were still working. But now you can get it even if your employees are working. So like, let's say they're working from home or on modified schedules or things like that. You used to have a hard time getting ERTC for that time period they were working. Now you can effectively get the credit by keeping them on payroll. So that's a nice little distinction too.
Yeah, and now one thing Matt said that I want to provide a little distinction, to use that word as well. Matt said up to $14,000 of payroll for the employee. Let me be a little more clear. It's 70% of qualifying wages. So to get the 14 grand, you're actually paying the employee 20. So you're paying this employee 20 grand. You're doing your FICA match and during the first 2 quarters, and then you get this $14,000 credit. So just keep that in mind. It's not dollar for dollar. It's 70% of the wages up to 20 grand or $10,000 per quarter. Little tricky there. Now let me make one last statement, then we'll move to the sick stuff. Ugh.
Yeah.
Sick leave and family leave and all that. We're not even going down unemployment or stimulus today checks. But one last important point here is on this paid sick leave, you don't apply through the SBA. You don't go through the bank. There's no application. There's no forgiveness application. It's all taken care of on your 941 payroll quarterly reporting. So this is where all the big payroll companies are up to speed on this. Your accountant or whoever's doing your payroll reporting should be aware of this. And if you haven't taken advantage of the ERTC before, you're going to want to make sure that your professionals know where to make that claim for the credit. So like Matt said, these are 2 different lanes, really. And I wouldn't say one's a fast lane or a slow lane, or one's a city road, one's a highway. They're just 2 different lanes, and you're going to follow 2 different rules, and they can overlap a little bit, not overlap. They can work together in cohesion, but there's thousands of dollars on the table. And it's for these businesses that had a 20% reduction in sales or more. And to get PPP, it's 25% or more. But with ERTC, it's 20%. So it's actually a lower threshold too, which is kind of interesting.
Yeah. So that's ERTC. And we still got, we talked about stimulus checks, by the way, in round 1. So if you're like, why are you guys talking about stimulus checks? We went over those, the phase outs. 600 individual, 1,200 married, 600 per kid, even if you got 10 kids. Okay, we hit those in last week's episode.
And Matt, may I ask? I had someone come up to me yesterday, and this is just rumor on social media. Maybe has someone gotten a deposit? Are they literally going out? I have not seen anybody. I'm asking people in the studio. Have you heard of anybody getting their stimulus check? You have?
Mm-hmm.
You got yours?
Yeah, they started setting them, or started today, and they're going to go through next week.
So it started today. It's ending up in people's bank accounts. So
I've seen it pending too.
did you hear, Matt, of anybody?
I know the Treasury was going to like go immediately. So
Yeah.
I didn't realize it was that fast. Can
Yeah.
you believe the IRS moves that fast? Wow.
Yeah. That's usually they
Munchin doesn't mess around. You know,
I love that guy. That guy should run for president.
He should. I mean, yeah.
You should write a script of a movie, his life. You know.
Yeah.
Well,
good. You know, he was the producer of American Sniper, the Chris Kyle story. Like I was like finished the movie a few months ago, and it's like producer Steve Munchin. I'm like the Treasury Secretary. What? He's a Renaissance man.
He is. He's awesome. Okay. Now, but we're not going to talk about unemployment or stimulus checks, but we get into this sick leave issue, which is a tricky one. Okay. So under this generally what the emergency paid sick leave is about is it's 2 weeks of pay that you would give an employee reimbursed to you by the federal government. Because they're saying to the employers, hey, if this employee gets sick for 2 weeks, you still pay him. And we'll reimburse you and up to a certain amount. And you're not required to participate. That was part of the old rule. But and I'll let Matt give a little more distinction. But basically, sorry, I didn't mean to dive deep too much, Matt. But in this lane of emergency paid sick leave, what you're doing is we're giving employers some perks to keep people on payroll while they're out sick for 2 weeks. Now there's 6 rules, and how you're compensated as an employer for doing this depends on what the reason was the employee gave for being out sick. The other lane is called, previously under the Family Medical Leave Act, is now called the Emergency Paid Family Leave. And that EPFL says, hey, we're going to give you 10 more weeks if someone is out sick and you cover them as an employer. We want to help pay the bill. So those would be the 2. And again, they work in synchronicity here. They're synchronized. The first 2 weeks would be emergency paid sick leave, and then you jump into this emergency paid family leave lane for a total of 12 weeks. Okay, so those are the 2. Matt, why don't you break down the first one? Emergency paid sick leave. How does this work in detail?
Okay, so you get 80 hours. All right, that's the 2 weeks that is paid. Now this is at their regular rate of pay. When we get to the next one, it's a 2/3 rate of what their regular pay is, but it's a regular rate of pay. It maxes out around like $5,000 or so in total aggregate pay. So they can't be a high income employee that would get this 100%. But
that's under
still
the
pretty good.
3. Well, it's up to $5,000 if the employee qualified under the first 3 reasons. It's up to $2,000.
Which is basically you have COVID or you're subject to a state shelter in place order.
Yeah. Okay.
Or you've been advised by a healthcare provider to quarantine.
Yeah. The next
other ones are more about caring for a
Yes.
dependent, your child, your kid's school is closed. Those are the other ones. So think of the emergency paid sick as I have COVID, or I have to quarantine because I've been exposed to someone, or a doctor's told me to quarantine.
Yeah, that's right. And so I'll repeat that because I know we're kind of I'm fumbling over myself and talking over Matt. So people forgive me. It's not Matt's fault. Is under the emergency paid sick leave, under the first 3 reasons, essentially being sick or quarantining, your employer
From COVID.
Your employer gets up to $5,000. It's about $5,110 of reimbursement for covering your payroll, dollar for dollar, up to $5,111 or $10. If it's for one of the other 3 reasons, that's 2/3 pay for a maximum of $2,000. So they're going to say, hey, if you're just caring for someone, we'll keep you on pay. I'm going to get reimbursed by the government 2/3, and then cool, up to $2,000. And that's the emergency paid sick leave for 2 weeks.
Yeah.
But not everybody has to do it. That was the old rule, Matt, right?
Correct. Yeah, correct. The old rule was if you're a small business with like less than 500 employees, you had to offer this to all your employees.
Yeah.
Like there was cons you could show if your business, your small business had less than 50 employees and you were going to be significantly damaged, basically go out of business if you adopted this policy. But otherwise, you had to offer this. Now for 2021, the rule is it's optional. But if you do offer it, you get all the tax credits. So they're trying, rather than mandating it, they're trying to incentivize businesses by leaving the tax credits out there to still offer this. Because let's be honest, you kind of got to do this stuff anyways. If someone gets COVID in your workplace, you don't want them coming in for 2 weeks.
Yeah.
Let them take the paid sick and you get a tax credit for it, you know? Now this is a separate set of sick leave, by the way, from their regular sick bank.
Yeah. Now, don't be offended, Matt. I mean, I'm going to put you on the spot because I don't know the answer and you may not either. Let's say I get the PPP and I have an employee that gets sick and I keep them on payroll and I use my PPP money to put them on payroll. Do I get that forgiven and get the tax credit?
No, you do not. Okay. That is actually in the code. They've really done a good job to make sure you can't double dip on these things. Okay. But with PPP and the fact that it's 24 weeks, you get to use your PPP money now off of really like 12 weeks of payroll, you know, or 10 weeks of payroll that you qualified for. You get to use it over 24 weeks. Even if you had someone out under this, you're going to have enough payroll after the fact that you're going to be paying them so that you're still going to get all that forgiven. You know what I mean?
Yeah. Now, I'm waiting for Matt's answer because this is exciting. Now,
is this a chess match? You just put me into a corner.
Oh, no. Yeah. Checkmate. Okay. You're off the show. Get out of here. You're off the show. Checkmate. No. This goes from, okay, let's use a baseball analogy. I'm going to do my best. Base hit, I get the PPP. I use 60% of it for payroll. I get the whole thing forgiven. Oh, well, I got other payroll on top of that PPP money and the 60%. I hit a double. I go out and I get the employee retention tax credit of up to $14,000 for the first 2 quarters. Oh, but I've been working out. I've been doing batting practice. I'm taking control of my situation. I hit a triple. On the money after the PPP and the employee retention tax credit, I get one of these employees sick. Woo-hoo! Now I can throw in for this credit as long as I can show that payroll that I paid them during this sick period of theirs was not used with PPP money, nor the employee retention tax credit. I could foresee a person getting a triple out of this. Fair?
Definitely. Yeah.
Okay.
Yeah.
All right. I always wanted to get to third base. I might be able to do it with
Congratulations. It took an act of Congress, but you're going to get there.
You sound like my friends in high school. Yeah, it's going to take an act of Congress. And I was like, you're right. Yeah, I was kind of the Michael Anthony Hall of, my high school. I was 16 Candles. He was my mentor. That was who I was looking at. So yeah, it would act of Congress finally
Ferris
got me.
Bueller would be more mine. I'd be more Ferris Bueller.
I would agree. You were more of a Ferris Bueller. You really worked the system. I was a victim of the system. You were in control of the system. That's really what happened. Okay. All right. Now we got 5 more minutes. We got to wrap this up. Now we get to possibly the home run.
Dessert?
Yeah, dessert, home run, whatever. You use whatever analogy you want. But now
can we dispense dessert? I mean, I don't know. I was trying to
Oh, no. Oh, ooh. Okay, that's the grand finale. But I want to talk about the home run here. Because after 2 weeks of sick, now they're out for longer. Now we get to the emergency family medical leave. Which can be
they have
used.
COVID, then their kid gets COVID after them because they got exposed to them. Now they're on emergency paid family leave for 10 weeks.
Yeah.
Okay. And now this is at 2/3 of their pay though. They don't get 100% pay. So you'll pay them 2/3 of their pay and you're going to get a credit for that too.
Yeah. And so here's the important point. Matt said something very interesting there. Let's say someone walks into your office and they say, I just got sick. Now you've been paying for their payroll with PPP, and then you exhausted that. You took the employee retention tax credit, and they come in and go, I'm sick. All right, I'm going to keep you on payroll. I got a credit for 2 weeks. Cool. Then they come in and they go, oh no, I got my kid sick. I got to stay home and take care of him. You're not going to pay your employee their full wage. You would reduce their wage to 2/3 and say, okay, under the Family Medical Leave Act, I'm going to keep you on payroll, but I'm going to reduce your pay by 1/3, and the government is going to subsidize essentially your paycheck for up to 10 weeks now. Go take care of your family. Now, if you're really smart, after your first kid is sick, you're going to go cough on your third kid or your fourth kid, or maybe invite mom and dad over. Say, hey, come on over for dinner. And I'll if you get sick, I'll take care of you. You know, that's how people take advantage of the system. I'm not advocating that, Matt. I would not do that. But I'm just saying, someone out there will. Yeah.
Okay.
But that's how the emergency family medical leave works. It's 10 more weeks of 2/3 pay, taking care of America. Yep. We're making America great again.
Yeah.
Let's make America well again. Oh,
no.
I gotta hurry. Whitney, go reserve that on GoDaddy. Make America well again. See, I shouldn't have even put that on the podcast because someone can
let's edit that out. Let's make sure we edit that out.
Yeah, make America well again. I'm going to start selling those shirts. They're probably already for sale. Okay.
All right, let's hit dining. We got to wrap it. So you got to get the dining.
You know what, Matt? You've been such a great co-host today, and I love you. I'm going to let you share the good word.
The good news is Congress feels bad for the restaurant industry, so they gave them a gift. This gift also is for the small business owner that likes to go to the restaurants. Maybe entertain some clients. All right.
Woo.
All right. So your meals and your dining now is 100% deductible in 2021 and 2022. Right? It's both years.
Woo!
Okay, you used to have some major limitations on this, and dining was in the garbage can last year. So hopefully Congress thinks this will stimulate the restaurant industry, get businesses out there doing some entertainment and meals with their customers. So there you go.
Okay.
We're going to see a lot more dining expenses on clients for meals on their tax returns.
Yes. Now this gives us a lot to chew on.
Oh,
you get that?
I see what you did there.
You see that coming? That was good. Because here's the issue. I've got an article that'll be out in the morning on this. Let me throw a little twist at you. Okay, pretty easy. I go to a restaurant, I talk business, 100% write-off. Ooh, I'm traveling for business by myself. I go into a restaurant, stop at Carl's Jr., 100% write-off. Easy schmeezy. I have an employee staff meeting. I do takeout, and they bring in pizzas for everybody. 100% write-off. I ordered from a restaurant. I go to the bakery and get a dozen donuts for the office. 100%? I don't know. What's a restaurant? What is the definition of a restaurant? On the face of it, in my article, I say, maybe your food is being prepared for you. So I'm not going to the grocery store buying a can. I'm actually getting it prepared for me. So I go to the bakery and I buy donuts. Is that a meal? Is that a restaurant? What do I do? Now, this is food trucks, street vendors, caterers. Where's the line here, man? So I think there's some unanswered questions there. I'm gonna say that we've got to see how this plays out. Here's the good one. I want 100% write-off for my Rockstar that I'm holding. Notice, CEO of Rockstar. I'm doing this for you. I'm sponsored by Rockstar because I get 2 for $3 at every convenience store wherever I go. It's amazing. What if I walk into a convenience store and I get a hot dog and a Rockstar? Is that dining? I'm with you. We're talking business. We run down to the local whatever store in this Rocky Mountain West. One would call it Maverick. Maybe I go to Buc-ee's down in Texas. I get a little barbecue and I pick up a Rockstar as part of my dining. I get a plate of barbecue at the convenience store. Is a convenience store a restaurant? They prepared food for me and I grabbed a drink at the same time. 100% write-off? Time will tell.
These are the questions that we want answers for.
Yeah.
The people demand answers to these questions.
Yeah. Who cares about the purpose of life? I mean, that's a big I'm just leaving you hanging. See, this is what they do on TV. You're watching your favorite
Yeah.
show, and at the end of the episode, they leave you hanging. So you're going to want to come back. You're going to come back for the next
Awesome.
podcast. There you go.
Yeah. Well, thanks everyone for tuning into the Main Street Business Podcast. We're going to come back there's going to be a part 3. SBA and Treasury are going to be releasing some rules, some forms and stuff, some guidelines. We'll be digesting them and then sending it out to you. And that's not going to be a piece of crap. That's not the digesting part. It sounded good, did it? We're going to be digesting it and then serving it out to you. You know what I mean?
Yeah, we'll put it in a box and send it out. Oh my gosh!
Good,
But I foresee more than part 3 and part 4. If Fast and the Furious can do a part 7, we should be able to. We should be able to do a part 3 or 4 at least. I mean, how many Rockies were there? How many Jaws?
At least 5 or 6. Yeah. Well, if you count the Creeds, those are kind of Rockies, with the Apollo Creed. So, but yeah, thank you though for staying here with us. If you like the show, please give us a 5-star review or like it on whatever channel you're on. Share it. Get over to Main Street Business Podcast where you can learn more about Mark and I and our companies. And we'll be back.